Welcome back to another episode of the Learn to Swing Trade the Stock Market podcast. I am your host, Brian Montes, co founder of the Disciplined Trader Academy. Okay, it's been an interesting couple of weeks in the market. Had a bit of a sell off this past week. I'm recording this podcast on May 25th, 2024. We had FOMC come out last Wednesday, and looks as though Jerome Powell and the Fed is trying to lay the foundation for a potential rate hike. Market didn't like that and sold off Wednesday, Thursday, and recovered on Friday. So again, always an interesting time when you are trying to swing trade. One of the questions I got lately was on beta. And when I get questions on a different topic, I will grab those questions and make an episode out of them for you. And so the question that came in was asking about beta and how does it impact our ability to swing trade. And if you're a long-term value investor, you're probably not as concerned about beta. But when you are trading, beta can certainly become an area of interest and become one of the tools you use to help decide, become part of your trading strategy or your part of your thesis as to whether or not you take a trade. So today I want to talk about beta and make sure you understand beta and how it can impact your ability to trade. So, right, because swing traders, right, we often face significant challenges when we're analyzing stock movements, right? And if we don't have that clear strategy and become very overwhelming about which stocks we want to trade, especially if we are using a scanner of some type and we're looking for different patterns, like if we're looking for a bull flag or a bear flag pattern, if we're looking for patterns to trade, it means we potentially could be trading different stocks. And if we're not trading the same stocks over and over, then including beta in our decision-making process probably becomes a good part of that strategy. So let's talk about beta, make sure you understand it and how it can become part of your approach and become part of your strategy for analyzing stock volatility and risk. So, what exactly is beta? Well, in simple terms, beta is going to measure a stock's volatility relative to the overall market performance. It's calculated by comparing a stock's return to the return of the benchmark index, typically the S&P 500. So a beta of 1 is going to indicate that the stock moves in line with the market. A beta of greater than 1 means that stock is more volatile than the market, while a beta of less than 1 indicates far less volatility, right? And if we're swing traders, when we get into a trade, when our trade gets set up, right? Let's say we're trading a bull flag pattern and that bull flag pattern confirms, right? We have a daily candle close outside of that declining line of resistance, then, that trade setup is there for us. But if we're trading something that has a very, very low beta, we may not get the price action and the movement on that breakout that makes the trade worth it. Because the last thing we want to do as a swing trader is get into that trade because the chart confirms and everything lines up. But if we don't get any movement with that breakout, if there's not momentum, if there's not price action, if that stock doesn't catch a bid and all we do is continue to trade sideways, well, not only is your money tied up and not, making a return on it, we encounter a bigger risk that trade's going to go against us, right? So we want to make sure that from swing trading perspective, we're balancing the volatility of the stock to make sure we get the price action and the movement against, making sure that we have a clear strategy to manage the stop on that trade so that we don't get a huge drawdown. So it's really important to understand beta and how it impacts each thesis that we come across when it comes to implementing or executing a specific trade. So, if a stock has a beta of 1.5, it's going to be 50% more volatile than the market. So understanding how beta works will help you gauge the risk level of your trades, and it's going to help you align your trade strategies accordingly. So a beta of 1.0 means that stock is going to move equal with the S&P, right? It's going to move lockstep with it. So a beta of 1.0 means that stock is going to move with the S&P, whether that's up or whether that's down. A beta of 2.0 means that stock is going to move twice as much as the S&P. So a beta of 2.0 is a really volatile stock. So you've got to make sure you understand that if you're going to be swing trading a high beta stock, right? And then a beta of less than 1.0 is going to trade less volatile than the S&P index. So a beta of 0.5, right, it's going to trade half of that range of the S&P. So really important to understand beta and how you can apply it to your swing trading strategy, right? So because when you assess a stock's beta, you can now better manage your risk and you can optimize your trading positions. For instance, if you prefer a less risky approach, you might focus on stocks with a lower beta. Conversely, if you're aiming for higher returns and you can tolerate more risk, stocks with a higher beta might be more suitable for you. This approach is going to allow you to make more informed decisions, improve your chances of trading success in volatile swing trading situations and volatile markets. Okay, so now let me give you some examples of different beta ratings. We'll go with the most popular stocks of the day right now, which fall under that FANG or value investing category. Meta, previously known as Facebook, currently has a beta of 1.21. Amazon, 1.16. Apple, 1.26. Netflix, 1.23. Google, 1.02. And that was Google L, which is Alphabet. Microsoft has a beta lower than 1.0. Microsoft's coming at 0.89. Tesla, 2.41. And AMD, 1.66. So those are some examples of stocks that all of them have a beta of greater than 1.0, with the exception of Microsoft. Now, if you're wondering where I'm getting this information, I will link the site in the show notes. Finbox is the site where you can go in and grab specific stock beta information, along with a lot of other free information that the site offers as well. And Finbox tends to, the way they calculate the data is it's 5 years. So you have 5 years of data to average out the beta. So that's how the beta is calculated on Finbox. So it's pretty accurate. Now, let me give you a couple of examples of lower beta stocks. Walmart, 0.34. Now, recently, Walmart was on my watch list because it was developing a bull flag pattern. Now, it's since then broken out of that pattern, had great earnings, and actually gapped up. But Walmart doesn't move a whole lot day to day, right? So if you get into a swing trade with Walmart, don't expect it to move a whole lot. That trade could take you, weeks or months to get to a point where you make 2, 3, 4% on that stock. So you just have to make sure you're comfortable with that strategy. So Walmart trades at a beta of 0.34. Starbucks, also under 1.0, trades at a 0.97 beta. Mobile, which is the ticker symbol XOM, trades at 0.97, so also just under the 1.0 threshold. So, early on, as you're learning how to swing trade, it's a great idea to trade stocks with a lower beta, right? The stocks that are at 1.0 or just under 1.0, right? Because it's going to be less volatile and you can better manage the risk early on as you're learning to swing trade. And then as you get your skills developed and you get really good at risk management, you can start looking at trading some of the more volatile stocks, the Teslas of the world, right? The things that are trading at the 1.5, 2.0 mark. So this, hopefully, understanding beta will help you better develop your initial trading strategies, right? So let's wrap this up. So beta is a powerful tool that you can simplify to help you make your trading decisions, right? When you start to look at beta, it can help you simplify your decisions. So by understanding and utilizing beta, you can better manage your risk, assess stock volatility, and enhance your overall trading performance. You know what else you can have? Where else do you know where else you can learn about beta? By joining the Disciplined Traders community. So, right, when you join our community, you get access to a weekly watch list, access to a daily watch list, real-time trading alerts, and you get coaching on how to become a consistent and profitable trader. We provide daily educational bits and pieces to bring you along as a trader and help you develop a swing trading business that you can build out over time to become consistent and profitable when you apply the Disciplined Traders strategy and approach. The link to the community is going to be in the show notes. All right. Thank you for tuning in. I hope you found this episode helpful. Be sure to explore more of our videos and podcasts on swing trading strategies and share your thoughts on beta in the comments. I'd love to hear what questions you have. And don't forget to subscribe to the podcast or to our YouTube channel so you don't miss a single episode. Happy trading. Continue to manage that risk so that you continue to be able to trade successfully and trade another day, trade for another week, and trade for another year. Have a great week, everybody.